good afternoon. I'm with CEO Simon Marcotte of Northern Superior Resources. Simon is quite a gold forecaster and a good analyst of gold macro. Simon, can you tell us about the article that you wrote with a $30,000 gold price forecast?
Yeah, of course. And Rob, thanks for having me on. Always a pleasure to chat. Yeah, I did publish an article recently talking about the potential of gold here. 30,000 may sound like a lot, but keep in mind that oil did exactly that. Starting from 1998 to 2008, oil went from $12 to $140. And since then, a lot of liquidity has been injected into the system, and everything seemed to turn into a tsunami, and things seems to happen faster. I just think that gold is the next financial tsunami to come our way, and I think that it will that'll be the result of the Trump administration forcing or inducing wartime financial conditions in order to remanufacture the United States. And by that, I mean the administration to force global markets and the economy into negative real rates. We've seen negative real rates in the 70s. We've seen them during World War II. We always point out to the 70s where gold did exceptionally well. In fact, full credit to Tabby Costa at Crescat. He has a spectacular chart where he shows that if you look at the gold reserves of the United States versus the debt level of the government, and you look at where gold went in the 70s when you had that period of negative real rates, versus where we're at now, the equivalent of today would be 24,000 an ounce. So the way I see this is pretty simple. When a stock is doing well, share price is being valued on today's value of the future earnings of the company. When things don't go well and a stock is in free fall, all fund managers and investors turn their attention to the book value of the company. Well, same thing is true for a currency. So when things are being reset from a currency perspective, I see simply the gold reserves of the United States as the book value of the currency. So that's why I think we're going to see much higher levels than what we are currently discussing in mainstream media. Although I'm not saying we're going to see $30,000 gold, in a few months. Oil took eight years to see that. I think with the liquidity that's been greatly increased, I would think gold could see that type of reaction faster than this. But what you're going to need to see this will be real rates to go down and like I'm saying, going negative. And we had a little bit of an appetizer of an early taste of this, right? We had real rates that went negative for just a very brief period, just a few months at the beginning of COVID. And the gold stocks, including the juniors, catapulted and did very well. So imagine what in a long period, several years of negative real rates could do to those stocks. So that's what's so different about the current gold price environment. For the first time, I've seen gold is going up and decoupled from the real rates. Usually, gold goes up when real rates go down. It's a very high correlation, and now gold goes up without the real rates going down. And that's because the central banks are piling like there's no tomorrow in anticipation of those real rates going down to negative. And I wouldn't bet against the central banks. Now, why is it the stocks are not reacting? Well, because they don't need to, right? Because the rest of the equity market is performing well. So when real rates go down negative, then usually the equity market is not performing well. You lose money, especially in the bond market, and gold becomes the vehicle where you can create value passively in a negative real rate environment. And the bond market is so large compared to the gold market that just a tiny bit of asset reallocation from the bond market to the gold space can create very explosive scenarios. So that's a very brief version of the material that I've put out there to justify that type of target. But then the next few years are sure to be extremely interesting, to say the least. I did not end up in the gold business by accident.
Yeah, I think your point is very well taken about the negative real interest rates and actually how rates are pretty high right now. And they're still very much in positive territory. And so while some gold mining investors have been quite frustrated the last few years, there's a pretty good explanation for it. As you pointed out, the real rates are still very positive. They're not negative yet, but that probably won't stay that way for long. And gold has absolutely diverged from real interest rates, and maybe gold is a leading indicator. So tell us about your company and the Chibougamau gold camp, and why this emerging gold camp should be of interest to gold mining investors, Simon.
Yeah, in regards of the Chibougamau Gold Camp, the way I often look at gold projects is gold projects tend to all kind of move as a herd. When you have a camp that emerges, it's good for all of the projects in the camp. So even in the very difficult years that we went through over the last 5, 6, 7 years, there are gold companies that did very well, where their share price did very well, if they were in the right camp where the activity was happening. I can think of the camp of Guyana, that's already north of 20 million ounces. Companies like, G2 did very well there. Aris is focused on Colombia, but they're also involved quite a bit in Guyana and did well on that. There's also the camp of Yukon. Well, you have two camps there, right? Western Yukon and Central Yukon. So companies in Yukon like Western, White Gold are names that did pretty well. And I can also think of the camp of Finland, where is being driven by Agnico Eagle. And the camp of Finland had companies like Rupert and Orion who benefited from that. And I look at the camp of Finland where you have about 12 million ounces. Well, we think that Chibougamau is the next camp to emerge. And this camp, already between IAMGOLD and Northern Superior, we have in different categories, just about 12, more than 12.4 million ounces that have been defined already. So I think Chibougamau is just about, or is already kind of joining this type of size. You have the Chibougamau Gold Camp is kind of flying under the radar. Now, one specific attribute of this camp, which is one of the main reason why we got involved, is all of these deposits in the Chibougamau Gold Camp are very, very close to one another. So close, in fact, that it's the perfect model to do a hub and spoke a model, which is simply several deposits feeding the same mill. So we took the opportunity of those dark years of mining to consolidate that camp, because those 12.4 million ounces, those deposits that I'm referring to, if you go back about 3 years, they were owned by a total of 5 different companies. So fast forward to today, they are owned by either IAMGOLD, which has the largest deposit in the area, Nelligan, and us, Northern Superior. And you already have a lot of ounces there. And the other point is, I think that this camp is about to see a lot of spotlight being put on it. IAMGOLD has been doing spectacularly well in recent years with the ramp up of their Côte Lake mine in Ontario. And I'll just quote the analyst at National Bank, who mentioned that Chibougamau is where IAMGOLD is going to go next to provide growth for the company. So what's good for IAMGOLD as they de-risk Côte Lake, the more it goes well to finally have this mine in cruise control, the more they're going to be spending time, resources, and a lot of their narrative, I would expect, will move towards Chibougamau. So the next 12 to 18 months are sure to be quite interesting for the Chibougamau gold camp.
At the Philibert project, you have about 2 million ounces right now as it stands, at about 1.1 grams per ton gold average grade. A few days ago, you put out more results from the Philibert project. Can you tell us about the results and what's the room for expansion here?
Yeah, so in regards of the resource of our Philibert project, as you mentioned, we have just about 2 million ounces already. So when I talk about the potential hub and spoke of that area, it's not to say that our projects are not standalone. Clearly, for example, Philibert is already at 2 million ounces and growing rapidly. Absolutely has the potential to be a standalone project. I just think that there's enormous amount of value to be created by putting it all together. But it's a very exciting project that we have at Filibert. So we have about just shy of 2 million ounces at 1.1 gram a ton, as you mentioned. But we have been advancing a 20,000 meter drill program at Filibert. And we have started to come up with some results and very strong potential to expand, right? So this 2 million ounces is within a pit of 3 kilometers. So we had a big hit 200 meters southeast of the pit. That was 2.6 gram over something like 25 meters. We had another big hit 750 meters away, another big hit 800 meters away. And we also have had a lot of success at the bottom of the pit, always expanding. So clearly the mineralization keeps going, especially going southeast. That's been our focus in recent months. So clearly there's a potential to expand this resource. Now, more precisely on the most recent press release that you mentioned, we announced a new discovery, right? And it's not every day that that a geologist will allow you to use the wording new discovery. So it is a new discovery that we had 18 meters of almost 2.5 gram a ton, including 5 meters at 7 gram a ton. And that is, it's at the bottom of everything. So it actually opens the door to further underground growth. So on top of all the growth that I was discussing at surface, now it looks like we really have a potential to add some very interesting stuff at depth. And I should mention also, before we got involved with the Philibert project, it used to be an underground project only. And there was an economic study done on it several years ago, only based on the underground potential. So we completely transformed the project, having this big open pit at the top, but now we're going more and more underground, and we're having a lot of success. And that is very valuable, right? For example, Detour, who is doing, obviously, is advancing, is one of the largest mine in Canada. Now they are entering at the bottom of the pit. Now they're starting to go for the high grade at depth, and they're making an enormous amount of cash flow coming from that operation right now. So this is the type of things that can provide for a lot of growth potential. So Philibert, a lot of growth to come. So we're quite excited about its potential.
What do you see as the next key milestones for the company, and how do you generate shareholder value?
I mean, going back to the basic of the camp here, right? I think the main model of the company has been to, primarily consolidate the ounces of the camp. Because when you consolidate the ounces of the camp, and you're getting closer and closer to be able to do this hub and spoke model, as the more you consolidate, the more you make these ounces viable, and therefore you increase the value of those ounces without even drilling anything. So we've done a lot of that, and now we have been adding a lot of ounces through the drill bit, right? And we have a lot of projects to attack. So we've been focusing a lot on Filibert, but we also have the Lac Surprise, which is the western extension of IAMGOLD's Nelligan deposit. We also have both the Croteau deposit and the Chevrier deposit, which have very respectable grade, and between 1.5 and 2 for those two projects. But those two projects are huge systems that can provide for a lot of blue sky. We still have a lot of potential to add ounces even without acquiring anything. So we have a good 12 to 18 months in front of us for sure.
Okay, and I guess the final question, it's basically two companies in the, Chibougamau camp. How do you see the consolidation here playing out?
Yeah, I don't think I have a specific answer to that question, because there's several ways to see everything come together. I just think that there's so much value to be created by optimizing this camp to go after the higher value material, higher grade, better, good metallurgy like we have at Filibert. There's so much value in optimizing this camp that I think the mining industry will probably find a way to put it together eventually. But the change of focus from IAMGOLD more and more towards Chibougamau is quite timely, right? With the efforts that we are deploying. And I was listening to the conference call of IAMGOLD just a few days ago, and a lot of the analysts did have more and more questions about Chibougamau, right? Because I mean, obviously, IAMGOLD has been laser focused and very successfully so at ramping up Côté Lake, but once Côté Lake is entirely de-risked, then it doesn't no longer create shareholder value by being de-risked. So then the company will be able to afford to put more and more resources and towards Chibougamau to advance the camp and put a lot more spotlight on it and have a lot more of its narrative towards the Chibougamau Gold Camp, which is a bit of visibility as well. But in the conference call that took place a few days ago, there's an analyst that did ask about the Chibougamau Gold Camp, and I couldn't have been more pleased with what I've heard, right? Because that's exactly the way we see things. Mr. Adams, the CEO, mentioned that the camp is not only one resource, referring to the fact that it's not only Nelligan. He said, if you look at a map, if you look at sketches, he says it's really a trend. It's really a camp. It's not limited to one deposit. So he says we're thinking big when it comes to Nelligan. And he mentioned that there's potential to explore many places in the camp that they have barely touched. And he mentioned that he sees this camp, easily going above 15 million ounces, which I couldn't agree more. Now, interestingly enough, one of the analysts did ask them if they would bring in a joint venture partner for their assets there in Chibougamau. And that is probably from a note that was published by analysts at National Bank that had put in print the idea that IAMGOLD could bring in a joint venture partner for the camp. So this question was asked point blank. So the answer was not at this stage, but my understanding from his answer was we can afford to drill this out. We can afford to increase the size of Nelligan and Monster Lake quite a bit. There's no need to share the upside of the ounces that we're going to add to those assets. But I don't think he meant that they would eventually bring in a joint venture partner to build it. That was my reading, but I think he was referring more to the immediate benefit of continue building ounces in their assets in Chibougamau. Regardless how it's going to play out, This type of size of camp, this type of potential, this type of grade, and where it is in the world, someone's going to do something with it. A major is going to do something with it. If I'm, you'll be either IAMGOLD being very successful by itself or with somebody else. So for the time being, we keep building our ounces and advancing our projects, and it's timely work that we're doing.
Simon, thank you for your time.
Well, thanks, Rob.